To have a deeper business view about smart investment strategy in the current Indonesian financial market, we have Mr. Vicky Amarnani, Market Strategist, Monex Investindo Futures. Vicky, thank you so much for your time. Earlier, we keep talking about what's been happening with the rupiah depreciation level, what's happening with the gold as the commodity. Correct. I would like to take the educational part for this talk show using your expertise as well, representing Monex Investindo Futures. Sure. Smart investment strategy. The major question we keep raising up this question is always how to create this kind of investment as the habit.
Correct. I mean, if you see most common people, they're familiar with three types of investment. One is deposits. At least if I keep my money in the bank, I get certain interest, and it's safe, basically. First of all, I would say nothing is safe. You know, I mean, everything has a level of risk, but some has very minimal or minute risk compared to higher risk. But it is maybe one of the key words I'd like to share today is we have to diversify. When I say diversify, not just deposits, you invest into maybe real estate, into gold, into other asset classes. Besides, even deposit doesn't mean you keep all your money in rupiah. You have to also diversify from the currency. You should keep some US dollars. You know, with presidential election coming up, holding 100% money into Indonesian rupiah is not a good idea. In fact, maybe we can talk a bit later with the US economy recovering. I suggest 30% of your portfolio should be into US, if not more. So basically about investment is you should also see what type of trader or investor you are. Usually people who are more aggressive tend to take higher risk, high return. People who are more conservative, they would tend to take more on the safety side, maybe real estate long term or deposits. But we need to also understand that you need to diversify all your risk, basically.
How broad I can diversify my investment portfolio, because I don't want to be called greedy as well. Considering, let's say, I have big amount of capital, and do I really have to over-diversify my investment portfolio here and there? I put it, of course, put the eggs not only in one basket is always relevant, but how broad I can diversify my investment.
Yeah, I guess it depends on your investment, depends on what asset classes. For example, if you want to trade bonds, sometimes the minimum requirement is high, whereas with equities, the minimum requirement is much smaller. It all depends how much funds you have, but as a thumb of rule, I would say you don't invest more than 30% into one type of asset class, whether it's bonds, whether it's real estate, but maybe for deposits could be a higher percentage, up to 50-60%. But you need to understand, a lot of people think deposits are safe, but you have to understand it is not really called smart investing if you have all your money in a deposit, because with inflation, you put money in into deposit, your money increases, but your buying power actually reduces.
And no one can beat up this kind of inflation rate.
Yeah, exactly.
You're still using this kind of conventional way.
Exactly. So, I mean, you face currency risk as well. Sometimes people just think that I'm in Indonesia. I need Indonesian rupiah, so I'm not facing currency risk. No, of course. When you have to go out, whether it's for holidays, for investments, when you need US dollars, Singapore dollars, for global investors, it does impact what's happening with rupiah as well. So you need to diversify in terms of asset classes, in terms of currency. Basically don't lay all your eggs in one basket.
You think most of the Indonesian investors now start diversifying their investment portfolio? Are they already get used to this kind of what do you call strategy, diversifying my investment?
I think one of the three most common investments is gold, real estate, and deposits. But besides those three investments, there are a lot of other opportunities in the market, especially in the financial line. There's derivative product trading where you can trade forex, indices, commodities, CFD shares, where without owning the product, you can benefit from the difference in price. You can buy up, the price goes up a little, you can take some profit. But one other important bit I would like to mention about investing is that it is important to understand the product. Basically, the risks involved, whether there is leverage involved in it, and when you're taking a risk of a certain product, it is important to know your strategy. I see a lot of investors, investing into a particular asset class, and they don't understand what moves the product, or they don't understand the risk involved, or they don't have a strategy. Because, like, I do a lot of training seminars. I have like 50, 100 people in a room, and I know all these 100 people cannot trade the same way. Okay,
if you don't mind, maybe we can keep it for the later section.
Sure.
Understanding the investment product.
Yep.
Make sure you are still with us on Economic Buzz. We are discussing about smart investment strategy in the current Indonesian financial market with Monex Investindo Futures. We would like to greet you people in Singapore. You're on Economic Buzz, the English talk show program that gives you the outlook related to the economic issue for your business. We are still discussing about smart investment strategy in the current Indonesian financial market. We have Mr. Vicky Amarnani, Market Strategist from Monex Investindo Futures. It has happened that our team already prepared several VT about the financial education, one thing surely needed by our viewer. Most of the time, we are, being trapped in this kind of pitfall simply because we have no understanding and set of skills in terms of shielding ourselves, quote unquote, from this kind of bad exposure related to the investment. I would like to ask you, nowadays it is happening, it is occurring again, many fraud cases issue related to this kind of financial planner, even financial advisor. What is in your mind on this? Will this somehow like hurting the investment climate? Like making people getting much worried and holding back their investment plans.
Yes, there's a lot of like non-legitimate brokers who are coming there in the market, non-licensed. For example, in the case of Monex Investor Futures, we hold 3 licenses from the regulatory. One is BAPEPTI, one is KBI, one is from BBJ. So basically, this ensures client funds are segregated. We are a big firm. We are basically into several businesses. We have now 19 branches across Indonesia. These are important statistics that clients should keep into mind before investing into a company. I mean, besides Indonesia, there have been big cases of company going bust, such as MF Global, who have been running for years as well. So it is important to understand the particular entity you're dealing with. Are they financially strong? And the most important, are they regulated? Because I know a lot of brokers, in fact, where we have heard of these funny cases or, of the brokers having issues or errors, with client having problems with their funds, is usually the non-regulated brokers.
With those licenses you already hold as the Monex Investindo future staff as well, how do you maintain this kind of reputation? Because now people are having this kind of prejudices. Once you are coming to me, giving your advice, they're not that easily been, persuaded in a positive way.
Yes, of course. I mean, initially they have to understand that when a company is regulated, there is proper KYC, know your customer procedures. We have tight compliance. If the client does not meet our compliance rules, we do not open accounts for this client. So there is a stringent rule for compliance. And in terms of recommendation, I mean, Monex always invests in the resources. We have a 24-hour research firm. We have an education firm, which is done across all the 19 branches. Like we were discussing earlier, we have road shows into 15 cities where we have a certain theme. Like, for example, from the year 2010 to 2012, when gold prices was breaking new records from levels of 1.3 to 1.9, we were basically, highlighting that. And now recently, I mean, the gold scenario has changed, but we, of course, always update our clients with the latest development. We have a Monex daily newsletter, which clients get to their email every day or to their offices for fax, where they're continuously updating the market. Like you mentioned, you have to be very active. And times have changed. Before 2008, somebody could buy one asset and just leave it there. But nowadays, there's so much uncertainty, so much is going on, that you have to be more active and be aware of what's going on. Not only locally, even though your investments are locally, you need to know what's happening internationally. For example, with the Indonesian rupiah, today it touched 12,000. Sometimes there are reasons domestically that make a currency weak, like, in the case of Indonesia, deficit, presidential elections coming up, uncertainty. But sometimes Indonesia is okay, but it still weakens because of a stronger dollar. Because there's better data in the US, there's tapering, they're cutting the stimulus, rates may rise sooner than expected. So it is no more, basically it's no more just, locally, okay, I only invest into this, I only have to worry about Indonesia. You need to be well aware of what's happening globally. It can affect your currency, your business, consumer sentiment, what's happening. These are important aspects to understand.
I would like to ask you, how smart can we be in terms of facing and dealing with this kind of sometimes overexposure? Media sometimes could play also a big role. We must have this ability in terms of digging up the news behind news. After this one, Mr. Vicky.
Yep.
More of the discussion about smart investment strategy in the current Indonesian financial market will be brought to you soon. Stay with us on the Economic Buzz. This is Analyst Business Channel and Monex Investindo Futures. Back on Economic Buzz, this program can also be viewed through StarHub Asia Channel 121 Singapore with me, Erwin Suryabrata, and Mr. Vicky Amarnani, Market Strategist, Monex Investindo. Even by the time, right, when we are having this VT now, people might using this kind of news as the reference, the way they decide something over their investment. We just happen to have this kind of oil update news. I would like to ask you, when we are on a daily basis always being exposed to this kind of news from the media and whatsoever, how can we able in terms of creating this kind of ability in terms of shielding ourselves and filtering whatever information we have, so we're not becoming the unwise decision maker on the investment?
Yes. I mean, I would say thank you to technology that, now with the access of mobile phones, you can download apps such as Bloomberg, Reuters, that give you headline news, which you can quickly update with what's happening in the market. But another way, in case you are, doing something and suddenly a bad news comes out or something, it is important to basically have an investment trading plan. So when I say a trading plan, it means that before, let's say if I want to buy gold, if I'm going to buy gold today at the level of 1267, I should already have a trading plan of what is my action where's my profit target? Let's say my profit target is if it goes up by 10%, I will take profit. What is the particular level? 1330, 1340. Whatever the level is, I take profit over there. But let's say if it was to go down, would I average? Would I take loss? What is my risk to reward? I always tell investors that you have to have an effective risk to reward system. What does it mean? If the particular strategy, my reward is less than my loss, I will not take that position. Any position I take, I want my reward to be 50% more than my loss. So for example, if my loss is $10, my profit should be at least $15. That's a general concept I have, because when you trade, you buy products, trade online or any particular investment, you pay spreads, you pay commissions. So when you're already, taking that additional, that's a cost you have to incur as well. On top, you have basically higher risk and small reward. It doesn't work. Let's just take basic probability. If 50%, I take 50% more profit than my risk. Even if I have 10 trades and 5 are loser trades and 5 are winner trades, I still make money. So sometimes, when it comes to investing, it's not always about being right. It's about how much you make when you're right and how much you lose when you're wrong. That's a very important
I like
strategy.
it. It's very strong, powerful one I heard so far. It doesn't have to be right all the time.
You don't have to be right all the time.
You don't have to be perfect and right all the time.
In businesses, we make losses as well. Sometimes, you have a particular good, a product, and you know that if you don't sell it now, you're going to incur bigger losses, so you have to sell it. That's why it is a famous saying by George Soros. It doesn't matter whether you're right or wrong. What matters is how much you make when you're right and how much you lose when you're wrong.
I see. No, that's perhaps why most Indonesian people don't want to risk it, don't want to speculate it, because they want everything to be in the right.
In the right, exactly.
I have to be right.
And what happens when they want everything to go right? When things are going wrong, they're not able to cut their losses. When they make some money, they may take profits early, but when things go the wrong way, they do not want to take their losses. And that's a big problem, because what could happen is you could have 9 trades profitable, and one trade could eat up all your profits of your 9 trades, because you have no discipline, you do not have a stop-loss place. It's very essential to do that.
The bottom line and the main lesson here is it is impossible to say investment cannot go wrong.
No,
right?
Be disciplined, have a trading plan, know exactly where I enter, where I exit, what's my rules, and follow that religiously.
Right. Another second half of the talk show, Mr. Vicky. Make sure you are with us on the Economic Bus. We're going to talk more about smart investment strategy in the current Indonesian financial market. Stay tuned. This is MNC, Business Channel, and Monex, Investindo Futures. You are still with us on Economic Bus. We still bring our discussion about smart investment strategy in current Indonesian financial market with Monex Investindo Future. Well, how smart can I be when I would like to invest all of the money I'm working hard for, creating this capital? Right? I don't want to speculate and risking it, of course. But I always have this kind of big reminder on my brain system. High risk, high return. That's why I'm always tempted in terms of getting high return apart from this kind of risk factor. And it leads us in becoming the not wise decision maker.
Correct. Sometimes we get greedy. Right? We get greedy. And it's an interesting point you mentioned about high risk, high return. But sometimes I do not see, sometimes someone tells me, oh, but this is high risk, high return. I say it depends how you manage it. When I say management, it depends on your exposure. Let's say, for example, if you were to buy a property of $100,000, if you were to only shell out $10,000 and borrow $90,000 from the bank, I mean, it's a good thing now governments have rules in place, like you have to put 30% margin. But just for example's sake, you buy a property of $100,000, you only put $10,000, $90,000 borrowed from the bank. What happens if the property price drops by 10%? It's a fire sale, your property is gone, because what the margin you had put in, it's finished. But let's say if you bought the property of $100,000 and you had put $50,000 inside, so half of it was your own money and half of it was the bank's money, and it did, let's say property prices fell by 10, 15%. You have enough power to hold on to your position until it goes back up again. So what I'm saying is that sometimes the product may be risky because of your overexposure, you're highly leveraged. So keep your leverage under control, so when you face tough situations or tough investments, you can ride them off. Doesn't mean you do not have to take losses. Sometimes you have to face losses, but sometimes it's because of overexposure that we have to do a fire sale and sell our investment. Whereas actually, if you had managed it better, we could have written it off. So all I'm saying is that, let's say if you cannot afford to buy 100,000, buy a smaller house, but put a bigger percentage. Even it comes the same into forex trading or commodities trading. When you buy one lot of the euro dollar, you can buy one lot is equivalent to 100,000 US exposure. The margin required is $1,000. So you can control 100,000 with $1,000, 100 times leverage. Is that good? No, not good. This facility is available, but I always tell my clients, no, you should be trading with maybe 15, 20,000, 20% of the actual exposure you're taking so you can manage your risks. This is a very critical point. This leads people to panic and not being able to manage the position.
With the current economic situation and business environment, which of, put it into list, which of investment product nowadays can be categorized or classified as the overexposure here in Indonesia?
It depends. When I say overexposure, it means on any product you can have overexposure.
Any product.
Let's say you have 100,000, you buy properties worth 700,000. That is too aggressive. But if, for example, you buy a property of 100,000, you have 50% of your money and you have 50% of the bank's money, that is considered good. Because if you put all your money, then your returns become small as well. Through leverage, leverage can be a two-edged sword. You can benefit from it and get higher returns, but if you use too much leverage, it can backfire and you can actually lose all your investment.
Or perhaps here is the idea we should change those words, you know, and vice versa.
And this
instead
is
of saying high risk, high return, maybe you can, instead of saying high return, high risk, maybe you should start with the risk first, say high risk, high return.
Yeah, and
so
the risk depends on you. You can control your risk. When you're trading, you're buying stocks, equities, bonds, you can place stop losses. You don't have to be in front of the screen. You can tell your broker, look, if the price goes here, I would like to cut my position. You don't even have to talk to the broker. Down the system's all online. You just place, you buy a Microsoft stock at $30. If it drops to 77, you want 27, you want to sell your position, you just place an order. Even though you're not in front of the screen, your order is done.
Okay, from Monex Investindo Futures, then what kind of preventive strategies can be shared with our business viewer in terms of minimizing those risk factors? After this one, Mr.
Sure.
Economic Buzz will be back soon with more tea from Mr. Vicky Amarnani, market strategist from Monex Investindo Futures. You're watching Economic Buzz. We still have Mr. Vicky Amarnani, market strategist from Monex Investindo Futures, to share his view over the topic that we bring up in this talk show. Sounds very perfect when we have this kind of good ideal trading plan. Now, here is the part I need to ask you the role of the financial planner and financial advisor to come into our life, because sometimes we need assistance, really. How to set up and understanding the limit as well in terms of measuring up the risk tolerance in our capital investment.
Yes, I mean, you have to understand the risks involved with every asset class, whether it's real estate, whether you take an insurance, whether it's commodities such as gold, whether it's trading activities, buying stocks, bonds. But also I like to segregate into two different types, liquid assets and illiquid assets. I sometimes notice investors get very aggressive with illiquid assets such as real estate, property. They see property markets, especially like if you see from 2009, Indonesian property markets have gone up by 2 times to 3 times. So 300% returns. But you have to understand, when you buy, if you are fully invested into property and suddenly there is a need for funds, I mean, no touch wood, if something wrong happens, you need funds. You have illiquid investments, you have to do fire sale, that is not good financial planning. So you have to manage between liquid investments and illiquid investments. So let's say deposits, you know, are considered liquid. But for example, real estate or certain hedge funds where you cannot redeem your funds for the next 1-2 years, they're considered illiquid investments. So there needs to be a right balance so you can manage your expenses. Let's say your business is giving you expenses, but what if your business goes down and it's not returning any profits, or you're facing a tough situation at the moment with your industry you are in? So this is what a financial planner will guide you, how to diversify, how many liquid investments, you know, what is your skill area. Sometimes you do not diversify into too many assets, you lose focus as well.
I told you earlier.
So these are important things, you know, and sometimes certain access points, sometimes certain products, you know, the tax level is too high. Tax planning, financial planning, investments. When it comes to investment, basically, what you're comfortable with. Are you a conservative investor, aggressive investor? These are all important things. A financial planner will also see how many kids you have. Do you have 1 wife, 2 wives? Do you have a father, mother, grandmother who needs to be taken care of? Out of your total investment, how many % is needed for expenses? These are all important aspects that a financial planner will take and give you advice once you have them. But of course, the expertise may lie in you. For example, I might be a good stock trader, a bond trader. So I know that's my expertise, and maybe I will, you know, allocate more funds to that particular expertise. But at least the financial planner will guide me correctly. So when things go wrong, nothing is certain. You know, if something, you know, unexpected happens, we can manage it properly. That's where a financial planner comes.
Again, we must bear in mind, nothing is certain.
Nothing is certain, yeah.
While I am having this kind of guidance from my financial advisor or planner, what kind of set of skills should I prepare for myself? So one day I can be my own personal financial advisor, financial planner for myself.
Education. I mean, let's say now I have good education into stock markets, bond markets, real estate. I understand deposits. I diversify my currencies. I have US dollars, Singapore dollar, Indonesian rupiah. I'm well diversified, not too much percent allocate to one asset class. But then I may still need I need a tax planner, or I may need a financial advisor to guide me. But once I have it, like we discussed, you'd have a trading plan. So when as an investor, I know what my objective is. Am I aggressive, conservative? What's my trading plan? I will also maintain a journal book.
Yeah.
When I say a journal book, means over there I'll have the date of the investment, what I bought, the amount of quantity, whether it's shares, whether it's property, how much I bought, at what price, and I also have a target in mind. What is my profit target? What is my stop loss? If things go wrong, like we said, it's uncertain. If things go wrong, where do I cut loss? What is the reason for entry? These are points I'll maintain in a diary.
One thing for sure, something can be learned.
So I can review and improve my trading as time goes along as well.
Let's use the last segment to talk about what kind of role then Monex Investindo futures. What can we expect when we would like to have transfer of knowledge from you, from Monex Investindo futures? After this one, Pak Vicky.
Thank you.
Make sure you are still with us. We still have one more segment on IBAS talking about smart investment strategy in the current Indonesian financial market with Monex Investindo futures.